Hello and good morning, and welcome to another morning market update for Thursday, August the 17th. This is George with Trade Pro Academy. I hope you guys had a great evening last night and are ready for another day of going out there and kicking some butt in the stock market and markets in general. I went out yesterday for a friend's birthday party. It was fun. It was a great time. I got a chance to unwind and let loose. And I got to just say, it's important to get out and enjoy life once in a while. This is what we do this for at the end of the day, right? Working from home all day, every day. Sometimes you get a little cabin fever, if you will. All right, Thursday's key earnings. Cisco down 3.2% on declining sales and profits. Target, as I call it, or Target, was up 3.6% based on it lifting its earnings guidance. So that's good. That's one of the companies in retail that is managing to do decent. In Asia, Japan's down 0.1%, Hong Kong is down 0.2%, China is up 0.7%, and India is up 0.1%. All right, in Europe, in midday, London's down 0.3%, Paris is down 0.2%, Frankfurt is also down 0.2%. So equities losing some steam from the rally yesterday and on Tuesday. All right, so again, we opened the week. We got to some bullish. We got some buyers to come in and accumulate into the market after running the price up a little bit higher. On Monday, Tuesday, we continued. Wednesday, Thursday, we're stalling out now here. Futures at S&P, Dow is down 0.1, S&P's down 0.1, Nasdaq's down 0.3. Crude oil's down a third of a percentage point and going in for a $60 or $46 target. Remember, we said short crude at 50.10, ride it down to 46. That trade should still be open. You should still have an opportunity to come in there and sweep the 46 liquidity out of the market and then take your profit. Gold is up 0.5% to 1289.90. We got a chance to get long gold yesterday at 1274. So we literally just flipped that and made some good money on that trade already. For a single contract, $10 move in gold futures is equivalent to $1,000. So do the math. In Asia, Japan's down. Oh, yeah, we already did that. Initial jobless claims today came out at 8:30. We got 232,000 versus 240 expectation. So that's actually a good number. Having less job or less people file for unemployment is an actual better statistics. So that came out good. 8:30, we also had Philly Fed business outlook. That whiffed a little bit. Actually, didn't whiff. It came out pretty positive. 18.9 versus 18.3 expected. Not a massive beat, but a beat nonetheless. So we have some pretty upbeat results here out of the economic calendar. For the rest of the day, we have industrial production at 9:15. Look out for that. Bloomberg Consumer Comfort Index, 9:45. 10 a.m. we get, excuse me, guys, 10 a.m. we get e-commerce retail sales. We get the leading indicators, and we have our EIA natural gas inventory number at 10:30 today. I love trading natural gas inventory. That's a really good day for us typically every week. It allows us an opportunity to make some good profit off that inventory number. We'll be trading that in our live room. Hope you guys could join us. All right, FOMC meeting minutes from the July meeting, from June 14th meeting rather. So here's what the meeting minutes said. All right, several participants were ready to move on the balance sheet in July. So a few of the FOMC voters said, hey, it's time to unwind our balance sheet. Let's roll this program out. Let's tell the market the details, and let's just implement this darn thing already. All right, however, others were seeking some confirmation from weak inflation. All right, so a lot of Fed officials were concerned that inflation is transitory, which basically what it means is it's still weak and it's transitioning, and they think it's going to start to get higher. But all this money they've pumped into the economy since 2009, and they have that liquidity out there still to this day, and inflation hasn't ticked up. That's worrisome. That's like firing all your ammunition and missing your target, or you hit the target and they get up and they still charge towards you. You have that moment where like your eyes turn into grapefruits and you say, uh-oh, what did I just do? And that's what I think the Fed feels right now in all their meetings. Like, how do we possibly add $4.5 trillion of liquidity into the market and inflation hasn't ticked up a single point? I'll tell you how, because that money's in the bank. That's how. All right, none of the individual consumers have any access to that. Anywho, so that's the concern. The concern is inflation's weak. They do not want to. They didn't agree to roll out this balance sheet unwind until a time that they see some better inflation numbers. Right away, they told you what the important indicators are. The next CPI is super important. All right. Next PPI indicator, producer price index, consumer price index. Those two indicators take prime paramount importance right now. When you look at non-farm payrolls, they're not as important anymore. Why is that? Because we already have a strong labor market. And this is what they actually said. They said they're satisfied with the labor market and overall economic conditions are moving as they expect. So what the thorn in their side is inflation. So that becomes front and center for the next couple releases. All right. A number of officials pointed to potential concern about long-term low interest rates. Those are most likely your hawks on the Federal Reserve. All right, the staff viewed recent weakness in inflation as transitory. Spending and labor market indicators are consistent overall with their expectation. However, the weakness in retail sales in June offered a note of caution. And I mentioned that. I remember when we had really weak retail in the group, I said, I wonder how the Fed feels about that. Obviously, they took a note of caution on that. All right, implementation of the program likely would begin relatively soon. This is in pertaining to the balance sheet, absent significant adverse developments in the economy or financial markets. They basically said, look, if the market doesn't crash or the economy doesn't take a dip for the worst between now and our December meeting, or September rather, we're probably going to announce the program. They said relatively soon, which usually means in the upcoming meeting. So I think in September, we're going to have no rate hike in the September meeting, mid-September, and we're going to find out the full details of the balance sheet unwind, or the beginning of the balance sheet unwind, and that's what the Fed's looking at. So overall, the tone of those minutes were slightly more hawkish. Okay, they were slightly more hawkish than we expected because of the balance sheet, but at the same time, it was a hawkish, dovish kind of comment. It was very strange how the Fed could do that. The Fed knows how to say things to make it seem like you could pick little bits about both sides of the argument. Anywho, point is, I think there's no rate hike in September. I think we find out about balance sheet normalization. U.S. dollar sold off initially on that. It's now rallied back up. Equities are weak. The S&P 500 market today is selling off. I think we're going to see some downside. Oil prices continue to be weak. I mean, if you're short already, ride the trade, make some profit. If you're not short, don't sell the low, for goodness sake. It's the worst thing you could do. If you missed it, you missed it. Wait for the next opportunity. Wait for the pop to short, or just buy it, try to fade it to the upside. All right, gold prices were still long. We think we're going to break out of this 1,300. Bitcoin soared to a new all-time high this morning. So we got some movement in the markets. We got some traction. Donald Trump just tweeted saying something along the lines of, I don't know, it's disappointing that this country feels that we need to remove our monuments and statues or something like that. So he triples down on his statements. Donald Trump just does not know when to stop tweeting. I think if we all pitch in about $5 each on these broadcasts, we could probably buy out Twitter at this point. I mean, how much is that crappy company worth, right? We'll buy out Twitter and shut it down. I think that'd be the best thing we could do. I'll start the fund. How about that? Two of President Trump's advisory groups fold yesterday, the American Manufacturing Council and Strategic and Policy Forum. They're great ideas to get America's business CEOs in a room to kind of strategize on jobs, but a lot of them dropped out because of some of his comments around Charlottesville, which is totally understandable. I mean, as a CEO of a company, you're the brand, you're the face, and there's no way you could take that kind of stuff and push it off to the side. First of all, it's a bigger issue than just pushing it off to the side, but you can't do it. So therefore, you got to step off that board. So a lot of CEOs left, and that got dismantled and dismembered. Another White House initiative, however, the American Technology Council, the ATC, that still remains intact. They have regular meetings. It's made up only of staff and employees from government, but they bring in a lot of business leaders in the past. So that still remains together, but there's no formal outside members part of that ATC. All right, so that's what you got. Things are heating up. All eyes off North Korea for the moment. It's de-escalated a little bit, that situation. Now it's going back to the administration and Trump, the tension shifting. So there's still more downside, I think, to come. Watch out today. I think today we open up that downside a little bit, see if we could test some of the low and liquidities over last week, mainly Wednesday, Thursday's lows. So I think we might try to make a push down towards that today. The upside was great this week, but it happened in a lot of volume. I think it's time to rotate and test the downside. You guys trade carefully, manage your risk. And even though there's a bearish outlook going into the session, be ready to shift your focus, shift your strategy, and get long if the parameters in your strategy tell you to. All right? Just because I say I'm short here doesn't mean that an hour later you're looking at the market and says, well, George is short, it's going up. I'm probably long on board that rally. That's kind of how we trade. We trade to analyze order flow, price action. We get ourselves in a moment right when maximum opportunity comes. Sometimes we'll jump in a trade and it'll literally hit our profit target within 13 seconds. Why? Because we picked the right time to do it. It's all about timing. trading is more like comedy than it is like being an analyst. You don't need to look at the right information. You need to have the right timing to execute with that information. You guys take care. Have a great day. I hope to see you in your live trading room. Sign up, tradeproacademy.com. We'll see you there. Take care, and I'll see you tomorrow morning for our last morning market update of the week. All right, trading room, give me a second. Allow me to end this broadcast, and let's